for joining. What we're starting off today is our weekly office hour section. We have inside Discord the ability for you to be able to ask questions in our questions channel, but we get so many questions that sometimes I think that get said over and over again. So I want to make sure that if you're a visual learner, that you get the chance to be able to ask questions. So this would be a dedicated 30 minutes time every week. You can come in here, ask any questions that you want. There's especially stuff that you want us to revisit or show specifically on a chart so that we can do a screen share through Zoom. So what I want for y'all to do is, I know there's one thing specifically that some people have asked for me to do during this session, which is show them how to create a trading plan, which is something I'll do. But first and foremost, I want people in the chat to go ahead and ask any questions that you have. And it can be anything from what is a chalk, or, how do you see the market like this, or, how you create a trading plan, or POI selection, or anything that you have questions about that we haven't had either chance to answer, or you want us to go a little bit more in depth. Maybe it could be a concept that you watch in the video and that you need to see more. I'm gonna give a couple seconds, let everybody ask questions in the chat, and I'll take them one by one. So go ahead and type your messages in the chat.
The winners 2 years ago, home advantage in this second leg against the Austrian champions. The Army got the opening goal in the first leg.
Sounds like there's some football going on there,
Right?
Yeah, I wonder who's playing.
All right. Got trading plan. So I know that one's been specifically requested. Any other questions that people may have? I'm just gonna give a couple minutes for people to chime in on the chat, ask any questions that they have, and then we'll go ahead and start answering them. All right, guys. Give me un momento. Okay. If no one else has any questions, I'm going to go ahead and begin with the trading plan. So hold on for me 1 second.
All right, Joe has a wee question here for you, Brian.
Oh, questions for POI. If a roll, if it takes out more than 3-4 times the zone. Okay. So before I do the trading plan, because I'm going to save the trading plan for last, it might take a little longer. Let me go ahead and answer this question. So let me pull up my, hold on 1 second. Wait, is it there? Perfect. Okay. So okay. So I'm gonna draw a quick whiteboard real quick. So specifically going to answer your question that you have, Joel. All right. So when it comes to POI selection, right? If the market goes up, and let's say, for instance, we're in an uptrend, right? And the reason why we know we're in an uptrend is because we have specifically multiple structure breaks.
computer use பண்ண சொன்னல
I'll
8
go.
o'clock ஆச்சுடா என்ன பண்ற
Anthony,
என்ன வேலை
Anthony,
இருக்கு
can you turn off your mic there?
Go ahead, please go on mute, guys. And so let's pretend that we know the market is going up from here. So we have 2 breaks of structure. So now we definitely know that we're in a uptrend. So when you look between this leg between right here and right here, right? So this would be considered the low, and this would be considered your high, right? So now we have an area of which we're playing from. In green, our general expectation is that price would come down and then price would come back up to eventually go, because we expect for the high to be weak and we're expecting the low to be strong, meaning that price would still respect a strong low and not go past that low and eventually go past the weak high. So this is what our expectation is, right? Okay. So that's not what we want to do, but I'm gonna put this as weak and put this as high. I'm going to draw out using black. We'll say, for instance, here's our POI. And let's say don't give me enough colors. Same blue, price comes down and it bounces here, right? And then price, let's say, for instance, doesn't go past that high. And say if it comes right back down to the same go and it bounces. And then let's say it goes one more time and a third time, right? So at this point, the POI that we've had bounced 3 times and price hasn't exactly left from it. Well, there's a couple of things that could happen, right? One, if you believe in what retail theory calls support and resistance, we've now identified what's called a support zone or support zone. It's a place where price has bounced off of multiple times. So we got 1, 2, 3 times. Now, generally, some people in retail believe that this holds, but we know for supply and demand that the number of times that a price bounces in the area, that's actually making it weaker. So we have 2 things that could happen ultimately after maybe, like, for instance, a third bounce. The price could go up. It could go up. Or we also could see that price ends up coming down. Generally speaking, if I see something bounce on a point of interest more than 2 times, I'm at most times not willing to get in the market after that. Because usually what I found from my back testing is after about 3 bounces, that's definitely not going to work. It's going to just fall backwards. And it's more likely going to end up being a losing trade because it doesn't show strength. I wanted to see, personally for me, I like to see that it touches 1, no more than 2 times, and it takes off. If the third time, let's say it bounced and it does go up and it goes to my take profit, I don't fret because statistically, I know that that's not the case. I know that that's maybe a 30, 20% of the time that can be the case. So what I recommend is that you back test it to see. But more than likely, the more times that it hits, Joel, it's not going to actually end up working in your favor. But still, for all things, back test everything we say. Don't just take it verbatim just because we said it.
Now, I don't know if I just drew my 15-minute zone too big, but when I went down to the 1 minute and I back test the change of characters, like it kept taking me out. But I don't know, maybe I just drew my zone too big. I don't know.
That could be the case because I found that I've sometimes had to make my zones lower because I would get 3 bounces in the area. And that's why I kind of look at sometimes like different. I look to see where is the cleanest zone that shows me the best break. And that ends up helping me save sometimes. So then for instance, I think I had something today on GBP USD that I was looking at, and it would have bounced 3 times in the same spot had I used a wider area, but I refined my area based upon 10-minute and only bounced once. And that was actually the one that goes. So that is a benefit of refinement as well, too. So something else that could help.
What's funny as well, Brian, what we also find is that, like, you might get a top off a zone, right? And then it might want to come deeper into like a 5-minute zone, not just the top of the 15. Have you ever noticed that? Like it'll go a little bit deeper into like another one that's like hasn't been mitigated inside the 15-minute POI.
Oh, yeah. I used to actually try to find those zones and mark those out so that I would know that, hey, if I take a loss here, wait for it to come back to this unmitigated spot within it. Because the thing about price, guys, and everything about the market, nothing in the market is random. Everything is calculated. price goes up to a point and doesn't just stop. Let's say, for instance, you're in an uptrend and it just stops and you're like, okay, it made a higher high. There's a reason why it made a higher high. People did not want to buy at that price anymore. And now they start selling or they start taking profits. So when you see price come back to mitigate a zone, it's mitigating a certain area. And sometimes it may not be specifically within what you see. It may be something on a different time frame, or it may be within inside your POI. But always know that nothing in the market is randomly done. It's all calculated and it's all very specific for a reason. That's the true understanding of supply and demand theory. Price is going to go up until nobody wants to pay the price. Price is going to go down. Well, I'm going to get a new whiteboard. So say, for instance, we're going to do a buy example. All right. So we have a change of character over here. Some people call it a BOS. Some people call it the change of character. Doesn't matter. It's really relevant. It's most important that we swept the liquidity here and that we also broke above and took out right there as well. So now when you think about it, your range that you play from, I forgot it keeps doing that erase button. All right. So you play from this range to this high. So essentially in the middle, this would be considered your EQ within your 1 minute leg. I tend to only look for POIs if we buy. I look for discount. So what does that mean specifically for me? I'm looking for POIs that, for instance, are in this region, like right here. I tend to stay away from anything that's here in premium, even on the 1 minute time frame, because everything about the market is fractal, right? So that means that if it works on a higher time frame, it's going to work on lower time frame. So the concept of premium discount can even be applied all the way down to a chalk. And I tend to find that where I get bit the most is when I try to say this is a POI and it's right here in the premium. And what price does is it bounces up, it does something like this, it comes down, kind of like Nathan mentions, it mitigates to the lower point and then it takes off. So I statistically figured out that I have most of my.
Jennifer trece tapos sister, bisa trece
Hello, can you please go on mute?
¿En serio?
Isha,
¿Dónde estoy? Kata,
Isha, can you
mo
mute your
bien warame
microphone?
Wapun may just stress mo. Minsan natin kiyo rin rabaya mo.
Isha,
Just stress pa sa ikwata.
Isa,
Like,
Isha,
why?
is it? See, maybe you can mute it manually, Brian.
I just got it.
Ah.
Okay. But essentially, guys, I statistically have found that those are the ones that bite me the most. Those are the ones that I get the most losses from. So I tend to, even on my M1 entries, I wait or whatever time frame, because it's all markets are fractal, means it's going to happen the same every time frame. I tend to always try to get my POIs either a little bit below EQ or right there within discount if I'm buying, and then within premium if I'm selling. And that saves me even on my entries as well. So that's just something that I tend to notice, that I spent enough time on the chart and said, hey, this is something I noticed in most of my wins. They were all the same. So I hope that answers your question, Nina. Jack, what about ranging market? But same question regarding POIs being retested. Jack, can you rephrase your question really quick? Because I want to make sure that I understood exactly what you're asking. Jack, go ahead and retype your question really quick in the chat for me. All right, so let's talk about ranging markets, right? So I'm gonna draw another example. So we're gonna do a ranging market. All right, so price is gonna go up, price comes down here, price comes up, and let's say we wick above, we wick below, and now we have basically a bounce. So essentially, in a ranging market, you have this being a POI of sorts, and then you have this being a POI of sorts. And it can come all the way down from this leg right here. So just imagine that the POI really starts away from right here. The same thing kind of applies. You're going to really test the extremes, Jack. So you're going to want to sell here, and you're going to want to buy here. Now, the thing about a ranging market is you may see price go a little bit above the POI, but you're not going to recognize the most. And so what I notice in those kind of markets is just that it wicks above. It doesn't exactly mean that we're going that certain direction, but you're going to take the sell because at the end of the day, you're taking it at the most extreme place. If you're, for instance, going up in a range, and you're taking the buy, which is the most extreme case in a buy example. So both ways, you're still taking the most extreme case of extreme entry. So it would be kind of like the last place of mitigation, really. So something to keep in mind. I hope that answers your question, Jack. Even so, and the thing about the market is it doesn't trend, but like 33% of the time. So most of the time the market's in a range. But if it's an extended range, I sometimes don't play because if I can't see clearly what direction I think that it's going to go, or I don't have a strong bias, then it's better to stay out because this is where most traders lose their money. Just FYI. When they try to play the range and they play it wrong, because eventually you might think, oh, it's definitely, you may think, for instance, price is going to go down. So your expectation is that you're going to see something like this. And so you expect to sell, but then what price ends up doing is it takes you out and it goes right above. And then when it breaks the range, all strategies are based upon trending strategies. You really don't want to deal with the market when it's ranging. But like, for instance, when it's ranging on the 4 hour, it's a lot easier to predict the direction because you know it's going to bounce from, for instance, that higher time frame to lower time frame. When it's ranging on the 15-minute, that may be harder for you to be able to pick what direction it's going. So you can still trade in the range, but you have to do what you feel most comfortable and back tested enough to be able to see. Because I, for instance, was trading like CAD JPY a couple weeks ago, and it had been ranging on the 4 hour for almost 3 months. But at least there were opportunities in a day because I could get a general sense of where my 4 hour direction was, which is my higher time frame, and then allowed me to find entries on the 15-minute. But after a while, I just stopped trading it because it was very hard to tell the overall direction. And you really want to be in the trending market. All right.
The other thing with a range too, if you can avoid it, stay out of the middle. Your probability of winning a trade either direction from right in the middle is not in your favor.
Yes.
Generally, anything between that relative equilibrium part, it's not in your favor. You know, if you're kind of down here, you're looking for those buys. If you're kind of in this zone, you're looking for those sells. But the middle, that's kind of where liquidity is drawn from. You just kind of want to avoid it altogether, even if that means sitting out the session.
All right. guys. All right. I am going to now go to the checklist. So basically, a couple people have asked what a checklist looks like. So when it comes to trading, guys, it really should be, some people say it should be robotic. I partially believe that. I believe that it should be in a way where you can be able to execute the same thing every time, because where most traders end up making the most mistakes is that they end up not really having a specific plan as to why they enter the market. They just kind of do things, and then when you kind of just do the same, do random stuff, you get no repetition. And you, for instance, you wouldn't roll a bowling ball a different way every time. Your goal is to try to strike the pins. And most people are always going to try to go right there in the middle, because if you can hit the middle pin with enough force, it'll knock down the other pins. You're not trying to go hit the pins on the right side or the left side or anything like that. You're trying to really hit the middle pin. The same thing when I think of like sports players like Stephen Curry, who plays the American basketball. He shoots the basketball the exact same. He tries to shoot the basketball the exact same way every single time, because he has a form in which he goes in to actually shoot. And so it's the same thing when it comes to your trading plan. Your goal should be the order forward until that condition's met. So they have something called, it's a methodology called if this, then that. A lot of people call this IFTTT. I don't know what the third T is for, but y'all can Google it and y'all probably find it. So essentially it goes like this, right? So the first thing I do is analyze trend. Right? If the market is ranging, I might say wait. If the market is trending, then I move on to the next step. Then look for POI. And then if there's no POI, then I might tell myself, then you need to wait. And then if there, is a POI, then I look for entry. So this is a really rudimentary way of showing y'all how to make a checklist with using a technology, like using a methodology called if this, then that. And it basically means when you don't have something met, don't start doing other stuff. Like literally, if I don't have a trend, then I need to wait. And you just wait until the conditions met. And then if you have a trending market, you move on to the next step, look for POI. If I can't find a POI, then I wait until I get a POI. Then after that, go on the next step. And so this is like a very simplistic way of how you should approach making your checklist. Now, Rob has a checklist. In fact, give me 1 second. I'm going to share my screen with y'all. I can figure out how to do that. All right. And so I don't know if hopefully y'all can see that, but it's a real basic checklist that he created. And so essentially the first thing he does, goes on the daily, looks at structure. All right, what is the structure of the market? Then he looks at the premium or discount. And then it's not needed for intraday trading, but he uses to check the trend. Then after that, he moves on to the 4 hour and looks at the structure. Are we in a structure? Do we have a premium or discount? A premium or discount zones. So he's looking. Then he looks for the POIs. Then he waits. And then, all right, once we hit a POI, then we're going to the 15-minute and looking at structure, then premium or discount, swing points, unmitigated areas, and so much more. And so basically, this is like Rob's checklist that you can use to be able to base your own checklist on the things that you need to check before you enter any trade. So this is one way of doing it. Mine is a little bit more elaborate. I'm sorry, guys. I've been trying to pull it up while we on this phone call, but hold on 1 second. I know where to find it. I have a more, I guess, more technical guide that I'm gonna show y'all that I created, and this helped me to be able to understand when to start, when to stop, and all this kind of stuff. So, give me 1 second. I don't know why it's here. Okay. So, now I haven't edited this in a little while. So, all right. Let me know once y'all can see my screen. So literally, I mean, it breaks down everything step by step that I need to do. So the first thing I do, start on a higher time frame, determine the trend. Then I ask myself, is it moving impulsively or correctively? And then I have little notes on the side to give me kind of feedback. All right, if it's moving impulsively, then do this. If it's moving correctly, then do this. Then I call key levels, POIs. They're all the same thing. There's nothing different. Then after that, I go down to what I call my trending time frame. Determine trend, map out any levels. And you'll see I have spots where it's, all right, these are conditions that have to be met. Has it been met? No. If it has, then you do this. If no, then you wait or you do something else. And so you literally make it to be, think of every single thing that you do when it comes into trading. So I have it mapped down to every specific step in the order that we do things. And specifically, I have certain criteria that has to be met for me to move on to the next criteria. And that's specifically everything that you need to do to be able to create your own method of your own trading. Now, how do you do this exactly, right? The way that you do it is that you focus on taking 20 trades on back testing, and I want you to write down every single thing that you do. So you do one trade in back testing and you write down, okay, I went to the 4 hour, I checked the trend, I mapped out my POIs. Then I went to the 15-minute and then I looked at the trend and then I mapped out my POIs. And then I went down to 1 minute. I waited. It for a chalk and I went for entry. You may have forgotten them, and that may be the reason why you ended up making a winning trade or a losing trade. Then you go do it a third time, and every time you're doing it after 20 times, you're just checking yourself to make sure, one, you're either following your rules, two, that you're not forgetting anything that you're supposed to be doing, and three, that your rules actually wind up giving you the results that you're looking for. I've revised that document probably about 50 times. And I'm not exaggerating about the number. I'm serious. I've done that about 50 times. I would go back and say, oh, I didn't do this step, or, oh, I need to add this step. There's something that I'm not doing. For instance, like adding maybe premium discount zones to make sure that I don't get bit by buying in premium and selling in discount. Like, it's little things that you'll begin to figure out. And I guarantee you, the more times that you do this, and the more times that you do this, you will end up finding success when it comes into your trading, because you'll begin to identify different things that you need to be doing that you're not doing, or things that you haven't been doing that you need to start doing. And I guarantee you, your trading will improve. My trading improved tremendously after I made that chart, because I began to be able to see the errors in my ways, but also got to be able to see the things that I was doing that was right, that I needed to replicate, until it got down to not even a science, but just a habitual thing to do it always the same way every single time. So I hope that answers your question on how to make a checklist or how to make a trading plan.
You know, Brian, I think as well, whenever you actually have a trading plan in place that you back tested, your plan is profitable. Like, you could go on a few losses. You could have maybe 3-4 losses in a row on a really shitty day. And if you don't have a plan, people tend to question themselves and think, am I doing this right? Am I actually going to be profitable? But having a plan in place that you're already back tested, in the back of your mind, my plan it's a profitable plan. whether it's, you know, you got a 50% win rate, 60% win rate, whatever win rate you got, as long as you know you are profitable because of that plan, no matter how many losses you take, you'll still have that in your mind, knowing that you've back tested something that's going to make you money. So exactly everything that you said there, having a nice detailed plan like Brian's, step by step, whether it's from, you know, marking out order flow, POIs, straight down to the 1 minute or seconds entry, whatever you're doing for entries, having it precisely done in that sort of way from A to Z to the second you execute that trade. It's so, so, so important to have a plan in place, steps to go by, and be able to be confident in your plan and take your trades rather than just taking anything in the middle of anywhere, you know. That's one thing as well that is, you know, super important. You know your plan is profitable.
Man, you have said it best. Like at the end of the day, even if I take a loss, I'm not concerned. Only thing I'm concerned by is did I follow my plan? So every losing trade, every winning trade, I always go back and said, did I do everything I was supposed to do in my plan?
Exactly.
And if I say no, that's when I go back and work on my own discipline for myself. But if I said yes and it still ends up with a loss, I'm okay because I did what I was supposed to do. You can't control the outcome of a trade, but you can control when you decide to get in. And I guarantee you, if y'all want those high win rates, or if you want to, for instance, see the best of your R and be able to be maximized, it's all going to come down to your discipline. Because, like I said, you can't control if you're going to win or lose a trade, but you can control. I decided to get in the market because it met my plan and my rules.
Yeah.
Or I decided not to be in the market because it did not meet my plan or my rules.
Exactly. And there's no better feeling than taking a loss and you don't feel anything about it. You know, you don't feel that, you know, that stomach gut feeling because you went by your plan. You did every single step that's possible. It's totally fine to lose. That was fine. I did my plan, you know. So important, man. I like that step-by-step sort of guide that you created as well, from like one pointer to the next yes, no answer sort of thing. That's actually really, really cool.
Yeah, I will post a version inside the chat Discord group. I didn't want to send it first without explaining it so people can understand it, because it really does not make sense unless you understand what it's based on. And then I gotta actually make revisions to it now. So y'all giving me homework to do. So because I haven't touched it in a few months, and I do have some tweaks that I need to make. So I'll post my finished copy in there for y'all. But thank you everyone for joining the first office hours. This will be hosted every week, so at the same time. So if you have a question that you don't exactly understand how to get answered in our Discord group, definitely consider this time reserved for you to ask questions. And if not, also if there's things that you need us to spend more time than just this office hours for, take advantage of the coaching calls with Nathan, Rob, and myself, so we can be able to work with you hands-on, like for a dedicated hour session, to really make sure that we can hone in any of these topics. So, all right, I'm going to close out this Zoom, but thanks everybody for tuning in to the first one, and we'll see you in Discord.
Thank you.
Thanks, Brian.